And we're now joined by SACCI's CEO, Neren Rau, to give us further detail on this. So quite a few numbers that I said there, but the point is we're below that key 100 level. We're not looking very strong. We've been declining over the last couple of months as well. Is this creating a lot of concern on your end, and is it really being fueled by a lot of the drama that we see on a global level?
We are concerned about the decline, but less so about the April decline than we were about the March. The April decline was less of a surprise in the extent that the BCI is not quick to turn a corner. We're hoping that it has now bottomed out and that in the coming months we'll see a recovery towards 100. Our outlook in terms of breaching the level of 100, and one must be reminded that 100 represents 2010 in aggregate. So one wants to get as far away from the 2010 business confidence performance and economic performance.
So definitely underperforming.
Definitely underperforming. We are not optimistic about breaching 100 on a sustainable basis in the second or third quarter. We believe that that is most likely to occur in the last quarter of 2012.
What's interesting there, and I mean, we speak of corporates having very cash flush balance sheets, but I know that there's a lot of concern with regards to household debt, and this could create a bit of problem, going forward as well. And this is one of the biggest reasons, or one of the reasons that we actually see a decline.
Correct. This time round, we've decided to focus on households, to hone in on the consumer. We've mentioned for a number of months in the lead up to this BCI that we need the consumer to come to the party. Corporates and even SMEs are poised to do greater levels of business, but we've missed the consumer in the dark. And this time round, we've invested substantial portion of our analysis to understanding households, why the delay. And we've also cautioned that although we want households with healthy balance sheets to become more active participants in the economy, to gear up towards those durable purchases, we are aware that all households are not in the same boat. Some are still struggling in terms of the weaknesses of their balance sheets. So we would rather that those households
rather deleverage as opposed to seeing households spending a lot more. The private sector credit extension number from a household perspective start to diminish somewhat, in a sense. Is that what you
That's correct. We're happy with the private credit extension number improving as it has, but a portion of that undoubtedly relates to weaker households who've had to refinance debt or engage in greater debt contracts to service existing debt. So types of activities that don't particularly contribute to greater levels of economic activity. So we know that that must comprise a certain portion of the total level of private sector credit extension. But on the upside, there's still a substantial portion that have contributed to the retail sales improvement. We've seen the automotive manufacturing numbers come out today, and we've seen improvement there. So there are a number of very strong positive signs indicating that the outlook is quite promising, even though currently we may still be in a tentative phase. From a confidence.
Okay, so I mean, we were saying that we need to get from the 100 points as far as possible, as quickly as possible. When are you expecting this kind of move to occur?
We expect that for the second and third quarter, we would continue to play in the range of 95 to 100. If we do, for a short period of time, breach 100, it's unlikely to be sustained. So we're looking at late in 2012, the last quarter, and into 2013, providing the promise of substantial improvements away from 100.